Hello and welcome to the Digi-Tools and Accrual World podcast. This episode is sponsored by the amazing Xledger, a mid-tier accounting system that is perfect for those wanting to move into the cloud and get the benefits of a full ERP. I'm your host, Ryan Piercy. I'm joined by the beautiful, magnanimous Indi Tatler today. So Indi, how are you?
Oh, very rarely get a compliment for being beautiful these days. I feel flattered. Yes.
Well, in the context of us two, you're definitely the most beautiful in the pod today. Not that anyone listening can
But you
see
are
that.
still the fairest of them all.
Fairiest.
Fairest and fairest.
I'll take that. But how's your start to 2026 been, Indi?
Roaring start. So I think it's going to be a very good year to see how we develop some of the things that we're working on. And on top of that, I think that I've been so deep into two different forms of technology innovation, one around AI and in of itself, the applications of it in our day-to-day. And then the second is more around the underlying infrastructure of AI, so energy and specifically how that's developing in different countries. Some of it can be super frustrating, and actually I find myself on a soapbox rant more times than you will care to know in most of my meetings if we circle back to how the UK is participating in this race or not participating in this race. But let's see. I mean, this is the year that they say the bubble pops, so all good.
Yeah. Let's hope it
How about
doesn't
you?
collapse and hit the economy, right? Yeah, I mean, I'm excited about 2026. I think 2025 was, as I've seen a lot of people post on social media, a year of strain. There's a lot of changes. Like I launched the Digital Transformers Group. I know obviously you went through quite a bit of challenge at the start of the year, Indy.
Did
John
I?
switched. Yeah, just a small.
Small
And then
challenge.
John has changed role as well. So it's been a year of change, I guess, for our personal selves in 2025. But I think 2026 will be the year of change for digital disruptors. And I'm excited to see where we take it over the coming months. So a little teaser there for anyone. Stay tuned if you're interested to see what we're going to be doing. But yeah, for myself, it's been a good start to the year. I'm excited. The only thing that's been horrible is the weather, and I'm just ignoring it. And just carrying on. It's British. It's Britain. It's always miserable, right?
Yeah. Look, it's not miserable. It's nice that the ground gets soaked a bit. I really
Flooded.
wanted some snow. I was unfortunate. We didn't get any snow. Super jealous about that. Me and my daughter, we waited for the snow day, and she was devastated the next morning because she had to go to school. But we were promised a snow day. But no, it has been awful for most people across the UK. So I have a lot of sympathy for people that have struggled with the power cuts and things that have been going on. But we will bring you some comfort of familiarity with the regular app news that we've got coming out. And it's a bit of a slow start to this year.
It is. It's, I guess, we were promised in 2025 that 2026 will be a crazy year for releases as AI takes hold and all the tech companies are using it and it's being brought into the product. And so far, it's been slow. But that said, there is still stuff to talk about. And I think you're right. Let's crack on.
Okay. So talking about circling back, we're going to circle back to something that happened just before the end of the year with Xero announcing one of its most consequential platform shifts that we've ever seen. So from the 2nd of March this year, 2026, the 15% App Store revenue share disappears and Xero will move to their usage-based pricing. So developers will have to pay how many Xero customers connect to the app and how much data they pull out of Xero. So we heard all of that before. We had a lot of people that reacted to it at the same time. But on top of that, there was the red line around no API data being used to train AI or machine learning models. I guess we can see the rationality. Xero has 4 million subscribers on its platform. 1 million of those come from the UK and is a $20 billion business. So having some reliability, ring fencing the data for AI, it's also a bit of an existential protection move. But for many of the small vendors, especially specialized tools, it feels like a rug pull. So though it's not changing anything for accountants, what we have seen is some experts have now waded in, and the backlash converges on one theme, which is data ownership versus platform control. And we've had several voices that have come to us as well directly. We've had Nikolai from Genesis. We've spoken to, had back and forth with Alistair Barlow. And there's been a few other conversations that have come to the fore in terms of their argument of who owns the data, and the fact that the accounting data exists because businesses transact and accountants apply their judgment and enrich that data so that it is enhanced for Xero. So software may process it as a custody, but it doesn't own it. And charging more while also restricting how the data can be reused, especially for AI, feels like a shift from an open platform to a walled garden. So, ironically, some believe this could accelerate the very thing Xero wants to avoid, which is AI native tools building their own general ledgers to escape these constraints. And it's not impossible to think that it could be an industry that is set for, or not an industry, it could be a product that is set for a seismic shift. We saw it with Sage, and Alistair made mention of that. Alistair Barlow made mention of the fact that we saw it with Sage, where we thought Sage would always be the one and remain really strong in the accountant's corner. And then Xero came along and disrupted that. So is it likely that we might see some more disruption again? Possibly. There's an open question for the profession is not whether the Xero can do this. It clearly can. It's whether tightening the moat strengthens the ecosystem or slowly pushes that innovation elsewhere. And there's also another lens on this that makes Xero's move look less like a power grab and more like regulatory positioning. So the UK Cybersecurity and Resilience Bill pushes massive liability onto suppliers in the digital supply chain, which fines up to £17 million and has strict 24 to 72 hour incident reporting. So in a world where platforms like Xero are no longer just the software vendors, they are regulated risk concentrators. If you see it through that lens, charging for data egress and banning API data from AI training is about reducing uncontrolled data sprawl and proving alignment with the NCSC cyber assessment framework. So fewer app pulls means less data and means a smaller attack surface and a cleaner accountability when something goes wrong. So the trade-off for the accountant, which most of the experts talk about, is the potentially higher app costs and less experimentation for new innovation to come into the space. But also there's clear assurance that core platforms are tightening the governance before regulators force their hand to do so. So I think we spoke about some of that last year. We probably didn't go into how Xero, if you look at the size and scale of Xero, they have to take a move like this in order to make sure that when the regulator comes along, they're not slapped on the wrist. But I do think that it's going to be interesting to see that disruption that we've seen coming and being spoken about in terms of how some softwares and some accounting practices or bookkeepers may also innovate, use their own technology because they are not forbidden from from using the data on AI or pulling the data. So it's not actually excluding accountants or bookkeepers who have built technology and using that data in their own processes. Super interesting. Thoughts, Ryan?
There's a lot to digest there, isn't there? Yeah, I mean, I think most people have said the premise of the transition and the structure of it isn't necessarily the problem. I think the AI side and the training on AI is one aspect. I think the tiering and the impact on journals or the journal API endpoint, which Xero have argued is to do with risk management, I think is a different argument. I think it causes problems for the small vendors. The journal API endpoint is the big bugbear out of everything. The AI one is can be a bit frustrating, but I don't think anyone's up in arms about that. I think there's a few niche providers that might be impacted, but mostly I think the concept this comes down to is is choice and control. The end business owner should have the ability to say whether they want or don't want their data being shared, and with it being used in a certain way. And that was kind of what was imposed on banks a while ago with open banking. And we've got no regulation around the tech side. So the software vendor can pick a path that they think works best for them. And I understand if there's some regulation or risk management they need to do. I don't think that's directly stated they need to go down this route. I think they could have done it in different ways. I think it helps them to do it, and it's an argument they can use to justify what they're doing. But yeah, I don't think there's a general problem out there that Xero changed the way they price. It's some of the details inside that I think have caused uproar. But moving away from Xero, I have some, I guess, early 2026 releases from Scoro. So if for those that are unaware of Scoro is an advanced project management or PSA tool. And it's a system that I've known quite well for a while. We're actually bringing it in at Digital Transformers Group. But there's always been a few weaknesses around Scoro. So one of the big strengths is it's really detailed on the financial side. Doing project management, getting really detailed reporting on the project side is really good, especially if you've got multi-entities and complex workflows in the way you operate. Scoro is great at that. But when it comes to kind of resource planning, when it comes to I guess even retainer models, there's been some weaknesses, but they're looking to address that, and they've already started doing that in 2026. They have released 3, I guess people would say minor changes, but I think they're fundamental generic, also big shifts in the way people that use Scoro. So anyone that's a Scoro user that works in this area is going to feel a big positive change from what they've done. They released watchdogs for monitoring retainer metrics. Now, a watchdog inside the system is the ability to go, we've got this KPI inside the system that we want to be alerted if it goes above or below a certain metric. So it's essentially another word for alerting system. But that was really good on kind of standard projects, but struggled on retainers where maybe you've got a certain amount of work you're doing over a 12-month period, and that may be front-loaded, back-loaded. And if you want to know, am I on track or behind, and give some kind of alerts, notifications to keep people to keep on top of that. That was always a weakness inside Scoro, and they've now resolved that. So if you've got a lot of retainer-based work, Scoro has now become more powerful for you, especially in flagging. And that's something that I've found from anyone that has got retainers in place. The ability to know where they are in delivery on that has always been a pain point. So I think this is a great, what I call little release, but actually big impact. They've also added context notes to your resource bookings. This is smaller. So bookings inside Scoro is basically scheduling when that's going to happen in the system. But the ability to add notes to it, so why you're doing it, what's the purpose of this, is helpful. And then more efficient bulk role management as well. So how is your staff when you're a large scale operator? How do you want to apply these to certain views? And because Scoro is a big platform, the management of that, I guess, was starting to become a bit more cumbersome as it was growing and adding more and more functionality. They've now enhanced that and made that more efficient. So I think best release out of that is the Watchdog for retainers. But off to a flyer, Scoro, compared to a lot of other systems out there that seem to be sleeping early 2026.
Yeah, I like this. It's very clever, like you said, for being able to measure and manage remotely, and then also being able to clarify where the job is at, or where the relative to how much we're paying, what's the kind of next expectation. It's very clever. So I have something different, and it's from the FloQast CFO app. So after years on the front line of companies like Google and Adobe, Razak Jallow has said that he's happy to come back into the startup world at the California-based accounting software firm FloQast. So questionable whether that is still actually a startup, because though FloQast was founded in 2013, the software now employs around 800 people and has raised over $280 million from external investors to date. So interesting to see
How
that.
is that startup, eh?
Yeah,
How
I'm not really
how is that
sure that
startup?
tallies with my experience of startups so far. But then again, it's still, maybe it's somewhat of a pioneer in its approach, and that's what they seem to have pushed forward, is that they're pioneering their B2B marketing, having recruited people like Sherry Ottery and Kate Flannery and other big name actors in a comedy series called PBC, which was accounting speak for prepared by client, which was a passion project of the FloQast CEO. So the show had gone on to earn some mainstream recognition and ran for 2 seasons with maybe a third one on the way. It's kind of like the Office version, but for the accounting market. I've never watched it, so might be worth a geeky look in now and again. But Jallo, more interestingly, he now he's come back into the market. He's really talking about the fact that accounting is not going away. And if you go back to look at the implementation of other tools like calculators, like spreadsheets, it never made accounting go away. So this whole this pride around the phrase that we always laugh and joke about, by accountants for accountants. He sees that as more, of a badge of honor to wear, because we're seeing shrinking talent in the field, and they're thinking about how they can maintain that talent pipeline as a vital part of the workforce, because AI tooling is really seen as the next step in the profession to accelerate those that are entering the field. And the fact that we see that there are more and more people who are in our industry reaching the end of their careers and retiring, but the business models now are becoming far more complex than they ever were. And we're seeing that case in point with the types of technologies that are coming out to service different elements of the problem. There is a lot more demand on what an accountant should or shouldn't be in this day and age. And some of that extends, I think, a little bit further to even some of the roles that we spoke about in the previous podcast, where there's like almost like a CFO like role to some of the tasks that need to be done, and technology can really help in that. So one of the things that they're thinking within FloQast at the moment and how they differentiate is they're talking about the difference between probabilistic AI and deterministic AI. And so one of the things that they are looking to do is the automation level, so that they can do a lot more in terms of deciding how the workflow can be automated, or where it should be deterministic based on the task in hand. So they're spending a lot of time building the AI into the product for accountants specifically, and the actual output of the workflow is automating some elements where they know that there's a high amount of trust, and that it will give the same answer every single time in a predictable and repeatable way. So I mean, I think a lot of people are saying that. I don't think there's anything different in what most people would say, but it's interesting to see that all-star kind of team, literally a bit of a star team, who are coming at this and looking at new ways to then really make that badge a bit stronger. So the by accountants for accountants, and looking at how they can introduce more innovation to the tech.
Yeah, I mean, I like the idea of deciding what to do based on deterministic and probabilistic. I can't say it correctly, but you know what I mean. And I think that really leads into, is it going to carry out a task, or is it going to bring something to your attention for you to do it more effectively? I think that's how I would look at those two, in how they should be treated. Deterministic, great, you can just do it. It's very clear. Probabilistic, this is likely to be what needs to be done, but we want to get that seal of approval to some extent from an experienced, educated party. And that, I think, for any AI development over the coming years, especially in the accounting side, is how I would, I guess, decide on those paths. Don't try and make probabilistic AI do everything. Just get a filter in place, an approval process that streamlines it and makes sure, or enables validation. And you can do that to some extent on review, which is what Xero's done with their bank reconciliation. They're essentially trying to make it easier. Like, they'll do something and then flag to you, these are the things that need to be looked at. And Xero are definitely not at the end of that journey. And I know I've already been using it, given some feedback in this, just on the ease of viewing it. And I know lots of others have given their opinions on what should or shouldn't be kind of turned on or off, so a bit more granularity. But it needs to be done. It needs to be kind of brought into these process flows. So yeah, I'm intrigued to see what FloQast do with this.
Yeah, and just to clarify, so for them, they're leaning towards, and they have built something that looks a bit like a deterministic model, but I guess
Brilliant.
it's not. It's something that needs to be tested in anger. And for those of you that do know the show PBC, there is no plan as yet to have a series 3, but never say never.
Cool.
So moving on from that, I've got something a little bit different. AI. Back to AI.
Always.
For the last couple of years, accountants have been sold a simple story about AI, which is that it's faster, cheaper, smarter. But the new data from Dext suggests the reality is messier. Half of the UK firms say clients have already lost money by relying on chatbot-style tax and finance advice. We're talking wrong expense claims, VAT errors, payroll mistakes, the kind that trigger penalties and not productivity gains. So the real sting is that accountants are now spending hours each week cleaning up AI-generated nonsense that should never have made it into the books in the first place. AI, in that case, hasn't removed the friction, it's just shifted it downstream straight onto the practitioner or whoever is in charge of signing this off. The profession isn't rejecting AI, but it's clearly drawing a line between specialized tools and general purpose chatbots that don't understand context, law, or consequence. Now, this is super important because obviously, even with an AI that, like, most people would think of an AI, let's say, as you're relying on the model, the underlying model, and how well that has been trained and how systematically it has been trained to not hallucinate. So that bit really requires additional governance and even in when you've used some AI, let's say, to try and build something yourself, or whatever it is, an output for yourself in whatever way that output looks, unless you have something that really has the context, the law in terms of what are the boundaries of this and the consequence of where something needs to fit, and the consequence if it goes wrong, which in most cases it doesn't know to that degree and that level. We really need to just treat this like it's another a technology assessment for even some of these AI tools that are coming out, and have like a sort of, I guess, like you would see it more often, Ryan, in your digital transformation projects, that you've got to have some boundaries around your criteria. But what's really
Definitely.
changed here is the client behavior. So many accountants now report clients actively challenging professional advice with the AI said so, which I've had many conversations around this. I've had it with you myself, haven't I? So it's
Yep.
new territory, it's risky territory, especially heading into 2026 with tighter compliance, NTD pressure, and rising insolvency risk. I can obviously speak to that firsthand. The call for regulation isn't about the fear of technology, it's about the guardrails. So accountants broadly want AI that works inside the rules, not confident sounding tools trained to please rather than be correct, which is often the mistake that most of us make when we hear the response given by AI. The opportunity for tech leaders is obvious. Build AI that augments professional judgment, not replaces it with hallucinations. That sounds super simple, but actually is very complex to do. In the short term, human oversight remains the most valuable and arguably the most underpriced piece of the puzzle.
Yeah, definitely. And I've experienced it myself through 2025, the challenges of AI-powered chatbots, because it's supposed to make life easier. It's supposed to reduce the burden on the support team, so they only have to get involved where it's complex. But you end up just going around in circles with something that doesn't understand the context of what you're talking about, that a human would know immediately, and be able to guide you through. Or you just have to fit in a huge number of fields to get to the point where they know who you are, so they can kind of look at your system. And I'm just like, this shouldn't be this painful. This should be so much easier. And then when it's giving you the wrong guidance back, which it has done before. And you have to go back and you go, is this correct? Because this says something else, some other thing you found through Googling.
You're right.
Oh, I'm sorry, you are correct. This is what you should be looking at. You just lose all faith because now is it what it's providing you now? Correct. So it's something that a lot of tech companies jumped into to kind of provide those interactive chatbots. We can do this via AI. It's a cost saver, but you're actually creating more problems, especially regarding your brand. So be very wary of doing that is what I would say. Well, I'm going to, I guess, wrap up this week's app news with 3 articles that I've picked up, all from the same business. And this is one where they kind of release like a load of articles in one time. So rather than just releasing them over time, it's like, okay, it's the start of the quarter, here's 10 articles. And normally I look at it and go, no, you're just kind of pitching your product. This is not something that's good. But this time I actually thought they were really on the money in some of these. How they tie into their product is maybe a bit looser, but we'll dive into maybe how it's relevant as we go through. So these articles are from WorkflowMax. So if you aren't sure what WorkflowMax is, similar, I guess, to when I was talking about Scoro earlier, it's a project management system. It's simpler. It's easy to, I guess, pick up, more out of the box, deeper integration into Xero, and where a lot of those that are going beyond Xero and needing some more advanced project management is probably the first point that they were headed with WorkflowMax. So good system, worth considering, and has been building out since it was taken over by BlueRock a few years ago. But the first thing that they pick up is the need now to consider using AI for forecasting staff capacity. And this is something that I've already this year had a number of conversations with accountancy firms on, is what tools are best out there to use capacity forecasting. Like, we want to maximize the use of our staff. We want to invest in tech to do that, so that we've not really got down, points where we've got no work, and we definitely don't want where our team's overrun. Let's try and spread that out, make sure we're hiring at the right time. And the main thing that WorkflowMax talk about in this is that AI-driven capacity forecasting is now becoming critical. It's a really good way of utilizing AI, but the only way you can do that is by standardizing a lot of the structure inside your project management system so that AI can work effectively. But I guess the first point is, what is it doing? Like, what's the point of it? And essentially it's looking at the data that's in there to go, how busy is each individual team member? Where are there clashes or bottlenecks based on the skill sets? So you need skill tagging to some extent inside the system. Where would certain projects need additional support based on leave, etc., or where something started to overrun? And therefore, where's it kind of building confidence and accuracy and alerts to enable you to have really good and effective conversations from a project management perspective with your clients? So it could be something where, and we've talked about this before with accounting firms, where pricing is too generic. If something comes in last minute, you're still charging the same as something where a client has been really planned and giving it to you early and allowed you the time to work on it. Well, actually, we should be being smarter with this and charging more for those that are creating, I guess, this pinch point, this frustration, this challenge. And not necessarily if it's a one-off, like we can have that as a consideration, but if they're doing that regularly, because they're creating more burden, they're creating more challenge for your team, they're creating more frustration. But I guess what are WorkflowMax saying here? Well, firstly, it's that you need to be able to standardize a lot of this inside the system. So you need good structure, you need understanding of budgets, skill sets, team allocations, and projects that are clearly defined in how they're going to roll out. And then when you've done that, you can use AI to predict how that's going to roll across, or where the task should be done or the job's being completed throughout a given period of time. And if there is a challenge regarding skill sets, it can flag that. Now, some project management systems that I have looked into over the last 3 to 4 months have started to build this out. From what I can tell, WorkflowMax haven't yet, but it is on their roadmap. They are looking at capacity planning. They are looking at AI. So I think that this article is all about prepping you, going, this is critical, this is important, which I 100% agree on, because they know they're going to be releasing something like this in the coming weeks and months. So really good article, something definitely that if you are doing anything regarding people management, you should be considering, how can we utilize AI to forecast our capacity planning effectively? The next little one they've done is about, I I guess, validation and fraud detection. So regarding invoicing, we've talked about this before with a number of those data capture tools, Dext being one of them, that brought fraud detection tools in. This is becoming more and more important. And as we get e-invoicing, I guess the connection between systems, this, I guess, to some extent, becomes more important regarding an individual business rather than an individual invoice. Some of the fraud detection will become redundant as e-invoicing comes in, but that automated process of invoice validation. So we've had something from a client, does this match a purchase order or a cost that we're expecting? Can we then auto approve based on risk metrics? Is something you should be starting to plan for inside your business. Once again, it's not something that I think WorkflowMax does to that level, but it's got a standardization around it inside the system in how you would receive invoices and put that through an approval process. The bits that I think we should be considering, and I think we talked about this in our 2026 predictions to some extent, is how we turn that into a valuable service for our clients. How do we enhance what we're doing from our outsourcing services to go, look, not only are we going to be processing this, but we bring in risk management from fraud detection. And that is a value add. You're basically saying that we're going to be able to pick this stuff up that most people won't because of the systems we're using. Sell that fact, bring the tool in, make sure you're using it, and sell that to your client. Enhance what you're doing. Even if you're just telling them you do it and you're charging the same, you're still showing more value in what you're delivering. And then the final one, and I know I feel like I'm going on a rant here about what we should be considering, but the final one is all about digitizing subcontractor approvals. Now, very specific here, but I wanted to talk about it because I'm literally having a conversation with a client about how this is such a pain point. So rather than, I guess, with employees where they submit a timesheet, you've got a process inside any system that takes you for approval, reroutes that and make sure that it's validated by whoever's managing that person. Subcontractor approvals just seem to be forgotten to some extent in a lot of systems because they're now sat a lot of time outside the system, or they're not tracking time in quite the same way. It needs to go through a different flow. They've got invoices that need to be matched against potentially time that's being spent. And what always seems to happen is this is done via a manual email back and forth. So anything that's being now kept inside the system is taken outside and delaying the process, because you don't want to pay the person necessarily until you've validated with them that what they've done on the job deserves that payment. So some businesses look to try and track some time. That's not always possible, but at least that validation approval process internally through your project manager to go, yes, they've delivered this work, pay that invoice, just seems to be omitted from a lot of project management systems. So if you do have that, and this is something obviously WorkflowMax are all over, then please ensure you've got a flow for this. It is something that has become critical because you've automated so much for internal staff that now a lot of your clients that have some subcontractors are looking outside and going, I just want like a portal where they've submitted something, I can, they've said that we've done these tasks, great, goes through the internal team, we push it out, there's queries, they answer those queries, and then once it's approved, we match it against the purchase order and make payment. Very quick, very slick, should be all done at week end, which is normally how subcontractors are paid, especially in the construction sector. So more of a flag for people's awareness. If you've got clients in this space, then this is something that is weak inside a lot of the systems and something you should focus on and should drive to some extent the system that you would select for them. Obviously something that WorkflowMax are all over and trying to resolve.
Very nice. Very nice, Ryan. Very big update.
So stuff is happening, right? It feels slower. It does feel slower, but stuff is still happening.
To hold your feet to the fire to say there's quite a lot of innovation there from WorkflowMax. We went a bit hardcore with them, but then great.
Yeah, and it's hard to tell. I guess to clarify that, how much is actually in the system and how much is thought process and going, we should be doing this and it will at some point be delivered. This is something that people will be focusing on. Because when I dived into the product itself, they talked a really good game in these articles, but then actually inside the system, it was a bit simpler. But that's to be expected. It's more of an entry-level system. So it's flagging some businesses need it, some businesses need something more simple. We just need to ensure you've got the right system to meet your needs.
Should we end on one that is maybe a little bit away from accounting apps, but I want to get your perspective on as well. Really interesting to see Universal Studios is coming to the UK and is going to be down the road from me, so that's going to be exciting. This year, this this month, we've seen the launch of a new practice looking to take advantage of all of that extra construction work and construction workers that will be flooded into the Bedford area. So our one of our digital disruptor network people, Alex Falcon, who has been on the podcast a few times and spoken to us about her challenges with Revolut and in general her big advocacy for AML and KYC and other types of technology that have been invaluable in helping her launch an international firm. It has launched another firm in conjunction with an accountant, and they're both looking to tackle the influx of construction workers and provide a lot of services and support to them. And the way that they say that they're going to do this is predominantly through AI and through technology enablement, through Zapier on the onboarding side, and looking at how they'll scale it on that side of things, with being able to have a Zapier that connects from one application to another, but then at the same time they'll use a lot of AI to do the processing. And they quoted Dext Solo in the article, or some sort of beta testing for it, which I don't. Ryan, tell me more about what you think about this, because is it as simple as that? I think it's a great gap in the market, and I think it's a really valuable way of showing collaboration between accountants, really jumping on something that then is happening, and like it's a little bit of a a blind spot for construction workers who will be impacted and probably don't have as much of an understanding of the tools that they could leverage. What are your thoughts?
Yeah, I mean, so I think at this stage as a accounting firm, like saying that we're cloud accounting, we're a cloud accounting firm, it's kind of like, it's just doesn't mean anything, right? AI powered. The AI is in so many tools now that you can say you're AI powered to any extent. I think it's great to be in that small business space and automating and streamlining as much as possible, especially with MTD. You've got some powerhouses that are doing this. We've seen this done incredibly effectively with Mazuma. And so having more firms out there that focus specifically on their small business space, I think is really, really, really positive. And as I've discussed in firms before, right, you've generally got two approaches. You've got that high level advisory, or you've got that it's like an engine room, right? It's all about churn. It's all about doing things really fast, really efficiently. And it's really hard to do both at the same time. So pick a lane, and they have, and I think that's really good that they've done that. And I'm kind of interested to see how that rolls out. And maybe we can get them on in the future to find out exactly what their tech stack is actually delivering and how it's delivering it.
Very interesting. Yeah. So maybe that's a good idea for us to kind of just chat to them about that. Great. So that brings this week's app news to a close. Thanks for joining us. We've launched our new website, and we are making it possible for you to join and sign up to the awards that will be taking place later in this year. So if you are interested in coming along to our awards event that will be held in September, just pre-Accountex, then please do join up and let us know on the website that you're interested in that. We're also launching something that you'll notice on our website is a kind of little events, academy area for those who are interested in being able to learn more about digital transformation, or maybe you're stumbling into this area as part of your firm and you already work in a wider firm. You've kind of become the accidental entrepreneur of your company because nobody else knows enough about this space, and they want you to sort out that thing because you're quite good with the computer and the digital side of things, and they're not really sure how that all works and pieces together. So if that is you, then please just give us a look up, sign yourself up so that we can get in touch with you. And we are taking registrations for that enrollment, which will be a course that we hold later in the year. So two little things from us. And if you haven't already done so, and I notice this, it's been a while, we haven't asked for any reviews, so I really value it if you can go on take the time to give us a little review on either any of the places that you listen to the podcast, or at least just sign up, subscribe, and join our Slack channel, because we'll be doing a lot more in the community this coming year. So thanks a lot for tuning in, and we'll catch you on the next one.